Webull closed Monday at $13.15, down about 20 cents or 1.5% on the day. On the surface, it doesn't look like a major move. But if you zoom out over the past 2 weeks, you can see a clearer picture. Webull has been trading in a tight band, bouncing between $13 on the low end and around $13.60 on the high end. It's a classic consolidation range, where buyers and sellers are locked in a bit of a tug-of-war. The bigger question now is whether the stock is simply catching its breath before making another move higher, or if optimism about the company's fundamentals has already been priced in and the stock is running out of steam. Let's start with the fundamentals, because on paper Webull's story looks strong. In its most recent quarter, Webull reported revenue growth of about 46% year-over-year. That's not just solid, that's the kind of top-line expansion you want to see from a fintech platform that's still in the scaling stage. A big chunk of that growth came from trading activity, equities, options, and now crypto. Customer assets on the platform also hit record highs, which signals that users aren't just dabbling, they're increasingly trusting Webull as a place to hold and grow their investments. That's a meaningful development in an industry where user engagement is everything. Add to that their international expansion. Webull launched in the Netherlands, marking its debut in the European Union. That's a significant milestone. Not only does it open access to US equities, ETFs, fractional shares, and options for a new pool of investors, it also shows that Webull is positioning itself as a global player, not just a US niche brokerage. That kind of global scaling potential is often what investors look for when they're trying to pick winners in fintech. And then there's crypto. Webull has been leaning into digital assets at a time when retail interest is once again on the rise. Adding Bitcoin and Ethereum trading to their platform diversifies revenue streams and makes them more competitive with other trading apps that have leaned heavily into crypto. So if you line all that up, revenue growth, record assets, international expansion, and crypto rollout, you would think the stock would be breaking out of its range and moving higher. But here's the catch. Despite those strong fundamentals, Webull is still operating at a net loss. In fact, losses widened compared to the same period last year. Expenses are growing as the company invests in marketing, technology, and infrastructure to support expansion. For growth investors, that's often acceptable. You don't mind losses today if the payoff is growth tomorrow. But for the market as a whole, it raises the question, how much of that optimism is already priced into the stock at current levels? And that's where the technical picture comes into play. Webull's relative strength rating is above 80, which means the stock has been outperforming most of the market. That's the kind of signal momentum traders love. But the chart tells a story of hesitation. Every time Webull gets up toward 1360, sellers step in. Every time it falls back toward 13, buyers step in. The result is this 2-week band that we're stuck in now. Why does that matter? Because ranges like this usually resolve one of two ways. Either the stock breaks out above resistance, confirming that buyers are in control and potentially setting up a fresh rally, or it breaks down below support, signaling that sellers are gaining the upper hand and a deeper pullback could be coming. Until one of those things happens, the stock is essentially in limbo. And that limbo is frustrating if you're looking for a clear trend, but it's also a signal in itself. It tells us the market is still digesting Webull's story. So let's connect the dots. Fundamentally, Webull is firing on several cylinders. Revenue is growing fast, user assets are at highs, and crypto plus international expansion give it new growth levers. But technically, the stock isn't reflecting that strength in a decisive way. It's stuck. Which leads us back to the central question, is optimism already priced in? One argument in favor of that idea is valuation relative to performance. Webull is still unprofitable, and yet the stock has been rewarded with momentum because of its growth narrative. That narrative is now widely known. The question is whether there are new catalysts on the horizon that can add another layer of excitement. For example, if crypto volumes spike or if user growth in the EU beats expectations, that could reignite the rally. If not, the market might be signaling that, for now, the easy gains have already been made. On the flip side, you could argue that the consolidation we're seeing is simply the market's way of preparing for the next leg higher. Stocks don't go straight up, even with strong fundamentals. They surge, then consolidate, then surge again. The fact that Webull is holding support around $13 rather than breaking down could be viewed as a positive. It means buyers are defending their positions. If that continues, the next breakout above 1360 could attract a wave of momentum traders who have been waiting on the sidelines. So what should traders watch for? The first thing is volume. If Webull makes another run at 1360 and does it with rising volume, that's a sign the breakout could be real. The second thing is how it behaves around support. If $13 holds firmly again, that's confirmation that the floor is solid. If it breaks below that level with conviction, then the trading band we've seen over the last fortnight could resolve to the downside, and we'd need to watch for a deeper retracement. Fundamentally, updates on crypto trading metrics and international expansion will be key. Is the European launch gaining traction? Are new users sticking around? Are crypto trading volumes adding meaningfully to revenue? These are the questions investors will want answered to justify paying up for the stock. Macro sentiment will also matter. If the Federal Reserve continues signaling patience and the market continues to price in rate cuts, fintech names like Webull will benefit from that tailwind. If inflation surprises and rate expectations shift, that could weigh on the whole sector. So here's how I'd frame the outlook. Webull is a strong fundamental story that's consolidating in price. It's not a sign of weakness, but rather a sign of digestion. The market has absorbed the growth narrative and is now waiting for the next catalyst to confirm whether more upside is justified. For bulls, the bet is that support holds, resistance breaks, and momentum carries the stock higher. For bears, the argument is that the good news is already baked in and further losses could be ahead if new catalysts don't emerge. My view is one of cautious optimism. I think the consolidation shows healthy price action rather than exhaustion. As long as the stock holds above $13, I see this as a base that could support a move higher. But the burden of proof lies with the bulls. We need to see a breakout with conviction above 1360 before declaring the next leg higher is underway. Until then, patience and discipline are key. So to sum it all up, Webull closed Monday at 1315, down 20 cents on the day. Over the past 2 weeks, it has traded in a band between $13 and $13.60, reflecting indecision in the market. Fundamentally, the company is growing fast, adding crypto trading, and expanding globally. But technically, the stock is stuck, leaving traders to wonder if optimism is already priced in. The next few sessions will be critical. A breakout above resistance could unleash new momentum. A breakdown below support could trigger more caution. Either way, Webull remains one of the most intriguing fintech names to watch right now. And that's the update. What do you think? Is the market already pricing in Webull's growth? Or is this just the calm before another rally? Drop your thoughts in the comments. Make sure to hit like if you found this analysis helpful, and subscribe for more updates on Webull and other fintech stocks. Thanks for watching, and I'll see you in the next one.